health savings accounts, and your taxes. My name is Tony Cameron with TLDR Accounting, and we provide tax and accounting services for therapists, small business owners, and individuals. So HSAs, also known as health savings accounts. Now, what they are is they're a certain type of account you can have with specific health plans. So a lot of times it's a high deductible health plan and it's HSA eligible. So not all high deductible plans allow one. So if you're shopping around for a plan, you want to look for one that mentions that HSAs are allowed. And what that means is if you're buying it directly or you're buying it from your employer, you get this account that you can put money into and spend on medical expenses. The big thing about it is it's tax deductible. So you're a small business owner, you have a high deductible plan that allows you to have an HSA. If it's just you, you can put $3,550 in it for 2020 and you get a tax deduction for that. That's great. If you have a family plan, it's $7,100 that you get to put in. Anything that, knocks some of your taxes off is always great as a small business owner. Now, an employer can also contribute to the plan, but you don't get a deduction for that since that's from an employer instead of directly from you. But, if an employer is giving you free money, that's great. Now, your HSA, though, it should really only be used for medical expenses. As long as it's used for medical expenses, you're not taxed when you take money out of it. But if you end up having to take money out for other things, say you buy a car with the money, then you're going to get hit with taxes on it since it was not used for a medical expense. So you want to make sure you only use it for medical expenses. A fantastic use case for it is, say you're younger, you have no health problems, you can start stocking money away in this health savings account that you can then use when you're older. Or say, you want to start a family and you need to pay for some out-of-pocket expenses for childbirth or prenatal care. So it's not like you have to use this money this year, right? I could put away $3,500 in this account. Nothing goes wrong this year, or I don't need to go to the doctors, and it can build up over time. And so in the future, say I decide to start a family and I need to pay for medical expenses surrounding that, I can then use that account even though I might no longer be on that HSA plan. So being on the plan dictates when you can put money in. It does not dictate when you take money out to pay for medical expenses. Now, the downside is normally these types of plans are high deductible, so that means you got to pay a lot of money out of pocket for them. The plan itself might not be the greatest plan, which is why I'm like, a good use case is you're a healthy individual who doesn't need to visit the doctor for anything, right? Now, the HSA account itself can be used for a variety of medical expenses. There are lists online that dictate what you can use it for, but for most things like doctor copays, or anything like that, you can use them for, which is nice. Now, that doesn't mean it's the best plan for you, but it is an interesting feature that does affect your taxes, which is why we bring it up. One of the things, make sure you do look at all the pros and cons, because say you have a lot of medical expenses, maybe it doesn't make the right choice for you. Again, we're not healthcare professionals, we're not insurance brokers, but they do affect your taxes, so we wanted to touch on it. If you found this helpful, let us know and subscribe below.